if the true tale of the tape here is a tale told by an idiot full of stout and fury, signifying nothing? What if we're agonizing over a seemingly chaotic situation that's actually a lot more stable than it looks? What if we need to take a page from the stock sages Cheech and Chong and chill out, man? Maybe it's time we took the pressure off ourselves. Whether we're stressing about the president's speech, the Federal Reserve's intransigence, or Brexit, or any other irritant du jour, I think we need to take a step back for a moment only, please, and recognize that there's really not that much happening. In honor of my 45th high school reunion coming up soon, let me invoke my great 8th grade biology teacher, Mr. Lawrence, who always said, Jim, don't sweat the program. Needless to say, I had a lot of trouble taking that advice while I was away. But I'm thinking about it now because I just took a rare break from the market, staying with my family at our place in Tuscany. It's got zero reception for anything. It's the only way to pry me away from the PC, the phone, whatever. And I got to say, it was really an enlightening experience. In the time between when I left and when I came back for today's big run, the S&P and Dow had rallied a little less than 2%. Not a lot, not a little. While we got some nice lift today, the averages are still off their highs from earlier summer. Now, I didn't check my email while I was away either. It's another rarity, because the only place with consistent reception was in my daughter's bedroom, and she's even tougher on me about not doing work on vacation than my wife is. So I waited and spent all day yesterday going through maybe 1,000 emails. What earth-shaking developments did I miss? Well, most were concentrated in a couple of days last week. First, we got these 3 blowout quarters: Dollar Tree, Dollar General, Burlington Stores, 3 trade-down plays. I think that, look, I knew what was going to happen because I read Matt Boss. He's the undisputed axe in retail over at J.P. Morgan. He told you exactly what's going to happen. Then we got a mystifying shortfall from Ulta Beauty that the analysts interpret as being kind of a preemptive obituary. What can I say? We saw a fabulous run in the semiconductor and the semiconductor equipment names, not because they reported good quarters, but because they recorded weaker quarters, and analysts are trying to get ahead of the potential bottom. There was the usual relentless decline in interest rates. Everyone talks about this like it means we're headed for inevitable recession. Weak bond yields are supposed to be a sign that investors have no confidence in the future. Normally, when rates plummet, a weakening economy is the culprit. But this time, the economy has an actual ironclad alibi. It was the European Central Bank in the billiard room with negative interest rates. The Federal Reserve has set our short-term rates much higher than pretty much every other developed country. So, of course, money is flowing from overseas into our bond market, pushing down yields. It's actually arithmetic, people. Good thing there's an easy solution. The Fed just needs to cut rates, certainly more aggressively than they'd like. And then we're golden. We can stop worrying. Finally, there's the endless sturm and drang about the trade war and the new tariffs, but we've been over this repeatedly. The well-run retailers think watch, okay, can force their suppliers to eat the cost and everybody else. Well, they have to, everybody else benefits. Hey, look, the retail market is really doing quite well. And it's, you know what, the problems are really in the mall, not in the stores. Last week, the president told us that China wanted to negotiate. Then China said the president was lying, and most of the media agreed with the Chinese against the president. I said it was a stupid thing to worry about. Who cares who made the call? Like I told you, all that matters was that they got the ball rolling, and that's what we saw in today's trade news. In other words, what did I miss while I was on vacation? Not much. Don't sweat the program. Look, I know there are momentous moments in the market. There are momentous moments. But you know what? It could be right around the corner. But this moment is not one of them.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.